What is going on, guys, and welcome on in. Happy Sunday. We are live for this evening, going over at least five of the top stocks I'm watching into this week. Then, of course, we will certainly open it up to some Q&A, talk about some other stocks, talk about different sectors, what's going on. So right now across the board, we are looking at futures down about 0.25% for small caps and tech. A little bit less across S&P and the Dow. So, I mean, not too noticeable. Nothing like, okay, like, oh my gosh, there was some massive news and all of a sudden the markets are tanking. Nothing too bad. In terms of case numbers for the virus, right, they have been going up. So it seems like we're not seeing a correlation between cases going up and the market going down. I mean, just something to note. I think people kind of, that's been factored in unless there's some massive breaking new news. I don't think that's going to really pull the markets down unless we see, enhanced restrictions. But then again, I don't know how and if that's going to happen outside, the talks of the passport and whatnot. But that's probably got some time, until that really gets rolled out. So we'll see. I don't think that's affecting the market, at least as of right now. But that could affect things down the road. So that's what we have there. I do want to point your attention to SPY hitting all-time highs on Friday. Take a look at that. Breaking out. Could be, looking for a bigger move to the upside up towards, dare we say, 450 as the next target on SPY. I don't know. It could be, it looks like it's headed that way to some degree. So that's SPY. That's the S&P. But bigger news than that, we do got to talk about Bitcoin. So take a look at Bitcoin. We got some interesting action. Okay. Hope you guys are doing good. We're going to dive into some more stuff as we push through here. So I do want to talk about a couple key stocks first, and then we can open it up to questions. So Bitcoin, look at this. I mean, it's right at that 45K. Why are we getting held up here? It's key area of resistance. We had this line in here from months ago as an area, 45,000. And guess what? Bitcoin is coming to that level. It was an area of support back in here. It was kind of a rough area right back in here. That was a key level to break down below as we started to fall to the 30s. And now we're struggling a little bit. At least, we had some signs of struggle. Now, if we do wake up tomorrow morning and Bitcoin's pushing up over 45, 46K, then we're breaking through that resistance and we can see some further upside with some of those, crypto related names, which I want to talk about first. Okay. So that said, that's the biggest watch. So we're watching Bitcoin, right? And with Bitcoin doing its thing, that's where I'll be watching my other stocks. So one of the biggest ones to watch is Btbt. I think the shorts that were in Btbt, they, got a little comfortable come Friday afternoon, thinking that, okay, let's grab this guy, let's bring it down. And the volume is not going to lie. Volume was up the highest of the week, looks like, on Friday. Yeah, it was. 77 million shares traded of a, almost $20 stock at this point. I think Btbt is a good long play. Now, that's with with watching Bitcoin. So that's what I'm watching. Okay. So watching Bitcoin, Btbt long as Bitcoin is continuing to hold up. Over $20 is going to be interesting on Btbt. We can see, if it gets over 20, we can see a couple more dollars for sure to the upside. And eventually, though, this will be an amazing short opportunity because it's pretty parabolic. It will be good. But I mean, I'm not going to fight this short or buy puts. I'm not going to fight it. I'll let it kind of get up in here. We start getting up into crazy levels that becomes more appealing, but at the same time, it's the obvious short. So we don't want to make sure we get, want to make sure we're at least looking both ways, right? So puts on this guy, not interested until we see Bitcoin cracking down and slowing down and pulling back, or, some sort of kind of failed breakout to the upside is where maybe a short makes sense. But ultimately, I would actually be looking at this thing long as Bitcoin's holding up on bigger pullbacks or dips. That's what I'm thinking, unless there's also the risk of offering, so be careful with that as well. But for short-term trades is what I'm looking at. FTFT is the next one that I'm watching as well. Really nice action on Friday. Looking for a continuation to get up over $3 and hold over $3. If it does, that's good. I think we can get a move towards 4, even potentially more up, or 425 is an area of resistance that I will be looking at as a profit target if I do get in this guy and look for potentially a short squeeze or a move to the upside with Bitcoin or with some of these Btbt squeezing. So that's what I'm watching there. And then the next one, there's more where that came from, but then the next one that I'll be watching is going to be SOS. Okay, take a look at this bad boy right here. It started to curl off the bottom, but it's still in a decent, I think, risk reward. So you have, I would say, looks like we're risking down to 250 with, I would say, you got some targets decently to the north of where we're at. This thing has been sold off quite a bit. decent volume coming in. I would be watching to play the trend here. Breaks out up over 315. Next target will be up toward 350, then $4. Then after that, 450. I think you can start seeing some big upside on SOS. And it's one of those heavily shorted stocks. Hindenburg short report. This one could easily get, the Wall Street Bets crew behind it like it did, back in the past. Easily gets that crew behind it, and this thing could go crazy because we're not talking about, a crazy, massive float stock. So this is one of those I'll be watching as well, on top of the other plays. Now, outside of that, I do like the airline plays. I want to be watching those as well. So if you guys know, I'm accumulating leap options on some airline plays. So JetBlue is one of them. While the news is bad, is where it's kind of my view on the airlines. So cases go up, news is bad, that's it. But also at the same time, I'm looking at these as much longer kind of time horizons. Okay, so I'm not looking at the airlines as okay, I'm expecting it to bounce here and go to 18 on JetBlue immediately. Now, it does look pretty good. It looks like JetBlue has come down, sold off for quite some time, and now is holding up in the 14s, which is really nice. And this thing could easily break back down to the upside and get to 18, hit my first target, and I can lock in some gains on some of my calls pretty quick. It could happen pretty quick, and that would be awesome. But at the same time, I'm also anticipating further cases, further news upon variants and whatnot, and vaccines, and I don't know. I'm anticipating a further drawdown. So if I get a further drawdown, I'm going to be buying more. If it just wants to bounce from here, great, let it bounce from here, and I'll take some profits on my options, right? I got so much time on those options, so I don't really care, and they're in the money plays as well, so they're really a lot less risky, as well as Save. You can play other airline plays as well. Save, lots of bad press lately, canceling lots of flights. So I think this one's going to have more weakness in the airline space. If you're looking for one that has more weakness and more downside in the short term, it would be Save. So Save is one that I do think we can get potentially closer to $20. If that's like my next area to be adding into those leap options on Save. At least that's my plan. If we don't get it, I have a decent position I talked about in yesterday's video. So I have a position there that I'm willing to kind of play with. I want to add a little bit to these option plays, but I also don't want to be too heavy and, put too much money in kind of one basket, like I like to say. So that's why I'm diversified across two airline plays that I think have more upside chart wise than like your American Airlines, your United and whatnot, or Delta. But, long-term play. So that's kind of like, those are 5 stocks right off the bat that I'm looking at personally that I like, 2 of them being long-term, and then the first 3 being, very short-term, looking at playing them long early tomorrow, potentially, and then there could be bigger downside short if Bitcoin pulls back. Now, they also could be squeezers. So if it could be where shorts get comfortable and Bitcoin pulls back and they squeeze, we'll obviously, have to watch that and we'll stay up to date. So Wednesday's live could be pretty, helpful if we're seeing continuation on some of those Bitcoin and crypto related names that are squeezing to the upside. So I appreciate you guys for tuning on in, and let us dive through. Okay, so Ocugen, let's go, OCGN. This is a bad boy that's been quite interesting. If we take a look, let's zoom in a little bit closer. This is actually interesting. I like this chart, for OCGN for sure. Look at this kind of trend we have right here. I wouldn't want to see this thing dropping much below $7 at this point. Yeah, it could drop below 7. I wouldn't want to see it dropping below like 650. So I would be looking at targeting up here towards 10. Because it's kind of a whole number, but we have some, much, more strong resistance lines up here towards 11 plus. But OCGN, if that trend holds, this could be a great play as well, especially with cases and watching cases in India and their progression going forward. I've been playing it personally in the past as I think I played it both ways. I played it long and short. I like it after it gets overextended as a short play, but this is an interesting play down where it's at. Risk reward wise, looks pretty good long. So if I'm looking at this guy, here's a great example, right? From where it's at, if you can get it under $8, for example, and you're targeting $10, that's a $27% target to the upside. And your downside here, if you're going to sell it, if it drops below 650, just under 20%. So it's not the best risk reward because it did push up a little bit on Friday, but seems like it's a decent risk reward, almost a 2-to-1, ratio. So I kind of like that. Melbourne Beach, Florida. Let's go. It's awesome here in Austin. It hasn't been hot. Just talking to people because I moved here a year ago. It was like 110 when I moved in, which is, for me being from the Northeast, it's kind of crazy, but it hasn't been that hot. It's in the like low 90s, every day, mid 90s. It's not that bad, to be honest. I love it here. So, let's see. Let me know where you guys are from in the chat below. Some news about Penn opening in more cities. I love Penn. I think Penn's going to be a great swing. I'm giving myself plenty of time on those Penn options, but I like, Penn is a great play. I've liked it as a long-term play as well. So it's kind of like I'm playing it in the short-term account, but I also like it long as well. So I've talked about that before in the past, buying it long and, just kind of sitting here long and, proud, and I'm good. I don't have to worry about it, right? Let's say, what is your strategy coming week? COVID cases rising, CPI report coming. Yeah, so that's the thing. I'm kind of more so playing, I like personally playing the short side of stuff intraday. I just find that for day trades more, I guess, fun or easy in a sense, because it makes it a little bit easier risk reward wise for me to notice, okay, this is an area of resistance. I'm going to take this stock short here and I'll stop out if it breaks over my resistance point, right? But that's what I'm doing. So I'm playing, especially because it's August, so small cap land has been pretty slow. So I'm playing the short side of small caps that pop up that do make some good gains off of either a pump or minimal news. That's what I'm playing generally. But I have a little bit less than half of my portfolio cash. So I'm leaving myself some time to add into some of those airline plays, add into something like Penn if it does dip with the market, if the market dips this week and whatnot. But then you want to be kind of paying attention to some of those potential, COVID plays. So OCGN is one right there. So that's one way with cases rising. This is actually a stock that's doing quite well. Again, we got our good friends over at mRNA that, the insiders keep selling, but look at this chart. It seems like there's starting to become some weakness here on mRNA. So this could be a decent downside play. However, cases going up, maybe this one that, holds up and continues to squeeze shorts out again. So it's one that I don't know. I kind of, there's some good support here in the low 390s. I would play, if you're looking at this one as a swing, I would say, risking yourself down to 390 on a swing for the long side, kind of as, almost a hedge in a sense, I guess, with cases. I don't know. I don't know how the market's going to take the cases. I feel like the market hasn't really cared about case numbers for some time. So I'm curious to see if that does have play a big role. So we will see. On a Delta plane right now. There you go. Let's take a look at Delta's chart. There you go. Let's take a look at that. What do we got? Delta Air, DAL. It's a similar chart. I mean, look at this. If you look at this chart, very similar chart to all our airline plays, and they are kind of coming back down after the kind of the variant fears, right? Delta variant fears. If we zoom out, let me zoom out a little bit more so you guys can see kind of the top end of where it was pre-pandemic. Delta was up towards like $60, and it's down here at 40. It recovered up to about 50 and pulled back from 50 to about 40, upper 30s, and now it's bouncing. So we have some, of these wicks down to like 30, 37, 38 on Delta. It looks like the airlines want to bounce. Now, we'll see what happens come tomorrow and come this week, but it looks like the airlines do kind of want to bounce from here. It would be a really nice setup if they do, but I'm not, counting on that with case numbers being on the rise. So it is what it is. OCGN is super volatile, so be careful on that one for sure. AHPI, AHPI is definitely a good play with the masks. AHPI is a good play with cases on the rise. It's one to watch for sure as well. It has pulled back a little bit. This could be a squeezer this week. I wouldn't be surprised if I see AHPI. I mean, I would love to get it lower, to be honest. I would love to get it down sub 6 or sub 7, but I don't know if we're going to get that. So right now, AHPI, I think, is one to just buy dips. It's one to buy dips and have a stop in place. Maybe it's down towards like 750, roughly, would be an area that I'd be looking at a stop. But looking at this one as a buy dips and sell into the spikes, because it does spike and come back down. It's pretty volatile, so it's one that's a low float. So buy dips on this guy, and it's a mask play. So cases on the rise, generally speaking, this does do decent. However, at some point, I wouldn't be surprised if we see more of a shift out of masks and into more kind of medical plays and more kind of, vaccine. I don't know if the vaccine stocks, but they had a good run. So I'm thinking less masks, and we kind of see more medical plays, I guess, is my anticipation. But we'll see how that plays out. AHPI is one. APT. APT, actually, look at this one. I kind of like it right here, the 50 SMA. Look at that. I would risk on APT down towards like $8. So risking less than $1. But I mean, I'd be targeting at least 10 plus on APT. So that's one to watch as well, I would say. Coming from Germany, Northern Michigan, Vancouver. Awesome stuff. Afternoon tropical rains down in Florida. Yeah, I mean, that's the thing. At least here, it's been kind of rainy a little bit. It's been kind of cloudy generally the past like week and a half. I would say we've had more clouds than I'm used to, at least here. But I can't complain. It's summer. It's it's August. It's not scorching hot for August here, so it is good. SSYS. Let's take a peek at this bad boy. What do we got on SSYS? This thing popped up and is pulling back. So I would say if it gets close to $20, it seems like a better risk reward. I mean, it's not a terrible risk reward as it is now. Seems like it popped up good earnings and now it's pulling back a little bit, but it could come back down and fill this gap. Let's see if we zoom in a little bit more. It could come back down closer to $20. So maybe give it, another 50 cents potentially if a drop to the downside. However, if it holds up here, like 21.25, it's got some range to make a move back to the upside. So overall, chart-wise, we zoom our way out on this guy. Look at the weekly chart here. It's, got some good support here down towards 18, and we have some resistance up here towards like 28 to 30. Over that, some range. So it's not a bad play. If you look at this guy on, I don't know much about the fundamentals here, but if I'm looking at this guy right here is where I'd be looking to buy it, right? So as low as I can, as close to $18 as I possibly can, I'd be trying to buy this thing. If I was looking to go long here and I had more background on the stock, right? It's not and the thing is, right? I mean, I obviously am not going to trade every stock. It doesn't make sense. So I kind of have what I'm in and I see, good potential in, and that's really kind of what I'm in, but there's always, way better opportunities, and there's always better opportunities probably somewhere else. So there's always something long, short, there's always opportunities, and you can play inverse ETFs and all that type of stuff. I'm kind of waiting. I would really love to get a pullback because I love to play SVXY. When volatility kind of spikes, this dips hard. And then I love playing the reversal, right, on this thing, or the recovery. But, it hasn't dipped enough for me to kind of want to grab it again. So I want to see it sub 50, and then that would be awesome. If we get it sub 50, I'd be starting to accumulate some SVXY, which is the inverse volatility. So I like that play as well. All right, let's see. FSLY. I haven't been playing. Oh, yes, this is an interesting one. It's been getting hit, right? It's been getting, we talked about this one a months back and when it was kind of holding up in this area, and it's been really interesting to watch this guy actually as of late. It kind of was in this range that we had right here, this kind of buy range, roughly speaking. And then it just started to fall to the bottom. So let's see if it holds up over $40. I would like to see it holding over 40 now that it reclaimed 40. If it can't hold 40, I think it can come back down and it could kind of slowly drain on out. Another thing to note too in general, with a lot of stocks that have made crazy runs the past year, I think we're a couple months out where we're getting close to a point of kind of normalcy back in the markets where we're not going to see, I don't think we're going to see as crazy of moves. You're still going to have those moves in the small caps and the penny stocks and stuff, here and there off of, news and low flow. It's great. But I don't think we're going to see as crazy of moves, as crazy of price action, day to day. But I do think we're going to kind of see, I've noticed it. I think it's pretty clear. And I think using, I guess, views or using kind of interest on videos like these lives, I do all this stuff because I enjoy it, right? I don't do it for the views, right? But I've seen it across the board that if you go back to January, it was like peak, interest, and like short squeezes were going crazy. Everyone was interested in penny stocks and everything was going up and everything, right? So it was been from about February through now it's August, right? And it's been a slow bleed out, right? Slow bleed out. And I think a lot of people have, number one, lost interest, and a lot of people have lost a lot of money, right? And so now I think we can start to get a better kind of pattern, a better kind of sense of how the market is. And pre-pandemic, I did really well because I identified kind of how this game worked, right? Especially for small caps, for my swing strategy. Now, the past like 6 months, it hasn't worked because we, number one, don't have as many bottomed out plays, and everything is it was so overextended that it needed so much time to come back down to reality, right? And even though stocks looked like they were holding support, they slowly fell through support. So I think we're getting to a point now where it's like a lot of the new money, a lot of that kind of, luck money, lost it all because of their practices. And now we're starting to see, I guess, as we move into the fall, I'm anticipating as the big money, the hedge funds come back from vacations and everyone gets back to reality, of course, barring any news and whatnot with virus cases and whatever, shutdowns and everything like that. barring any of that, I think we're going to get back to more of like we can kind of start to better get a feel or get a better sense for trends and how things are working in certain types of plays and small caps that are working and getting better back into sector rotation and that type of stuff. So let's move into like post Labor Day. It will get really hot. So this next like month or so is a great time to kind of like hone skills, stack some money, have some money, set aside, leaving some cash available like always, I think, so that you're kind of ready for when things heat up, which I think we're going to be getting, closer to that point where we'll get back into more of like I would say normal small cap market, right? And it's always changing, adapting, evolving, but I think we're getting close to that point. So let's see. Sorry if I'm missing stuff. I'm going to scroll back through. SoFi, I love SoFi. I'm probably going to trim it. I have it in my portfolio. I'm probably going to potentially get it out of it or sell a chunk if it does make a nice run into earnings. I don't want to hold too much into earnings, but again, that could be the catalyst that sends it even higher, right? So SoFi is sitting here just under $17. This chart is shaping up beautifully. I love it. I think it's a great long-term play. So it's something that I would be, comfortable just stashing in my IRA and not even looking at it for like 3 years. But, obviously paying attention a little bit, but, not really worrying too much about it as long as I'm, staying up to date every earnings report, seeing what's going on. As long as I'm happy with that progress, I'm good. They did also push back, I will say, student loan payments. That is pushed back until I believe the end of January 2022. So that was pushed. Federal loans, like government loans, whatever, that was halted. Interest and repayment was halted until September. That got pushed until the end of January of next year. So that's the next couple months. So I guess my potential play here is SoFi in anticipation of that. That could be a dump on SoFi because, less people are going to be refinancing, but they're going to probably get a big surge, I would think, in refinancing of student loans come whenever that deadline is done. Whenever we're done with that, whenever the government says, okay, now it's time to pay your loans back, you're going to get a lot of people refinancing. And I think SoFi could see some, a decent push into that. So that's one thing to pay attention to with SoFi as well. So that could be a negative, I guess, in the short term, but we'll see how earnings does this week. So I like a little run up into earnings up towards 18, maybe even 18.50 on SoFi, and then we'll see what happens. It could go, crazy. It's a really high short percentage stock, so it could get a bigger move to the upside. Lots of shorts are in that one. So I think we see when this one makes moves, it generally likes to make some pretty big moves. So we'll see. We will see. Skills. Let's see. Skills is coming down. Wow. Skills is interesting. Skills is coming down quite a bit. I think I was playing it back in here at like $20. I believe. Yeah, up in here. I was playing $20 and it fell off a lot. So it was actually a good short. Beyond that, now we have to look back. I would say we're getting closer and closer to a really interesting level on Skills after the crazy run that it made. But, down in here interests me. So I think we're getting ready for the next bottom bounce, but it could, it could come at like $10. It could come at $11. It could come right now. So I do kind of like it as we get down into this range as a decent accumulation zone, potentially for a longer term pop, for a longer term, move, or even for a squeeze. You got easy 100% upside from these current levels. At some point, like this thing gets back up to $20 and you got 100, almost $20 or 23 and it's up 100%, right? So there's range on Skills. Quite the range. So it's one that I even would play potentially like a small cap where you're buying the lows, buying the yearly lows almost. And we're getting back close down. If you get this thing, sub 10, you're talking about 52-week lows. So on Skills. So it's someone to watch if it gets down there. I wouldn't be surprised if we see some more weakness in some of these speculative plays in the next month. I would say the next month or so, we see some more weakness, extended weakness to kind of fully, flush out everybody who made their money. I think this could be one that we'll be, watching. Another feature on Webull, on the mobile app, you can actually see, I believe, where most people have bought in on a stock. And so it's interesting to note. SoFi Skills is one where I think it made such a crazy move. And so a lot of people had this thing, from, sub $20. Yeah, great. But there were a lot of people who averaged up, who bought more, and thought that they were averaging up, at a good spot back in here at like 25, and then they thought they were doing it again back in here at like 19, and now it's sub 10. So you're getting to that point where there's a lot of bag holders as well. So that's going to limit its upside as well in the short term, but ultimately longer term, right? Fundamentals ideally will reign supreme in the long term, and we'll have to watch how that plays out. Surprised ABT fell off. I am too. CCXI. This is an interesting one. I kind of like this trend that we kind of roughly have here going here, holding the 50 SMA as now right below that. It's got plenty of range on this one. I kind of like these slow grinders post, massive negative news or massive sell-off or post offerings. Like those are really good plays, in my opinion, for recovery. So this thing, as long as it holds up like $13, I kind of like that continued, higher lows. I want to see, roughly higher lows, maybe even like, $14, $15 I would like to see ideally holding on this one. Although it's got some range, some volatility. Targeting, you can get up towards $20, $25 is a decent target to have. I wouldn't be surprised if we see that, relatively soon. All right, let me see. Do you think the COVID plays will get hot again? That's the thing. I don't know. They had such good runs. I don't know, because it's interesting to me how it's really not. It hasn't been super correlated. The mask plays are having their ups and downs. I think there's more upside. So APT, I might write that down on my list as well. APT looked decent for a long play. 50 SMA as my guide, as my risk. So that's one to watch. I'll go back to that one really quick for those who are just tuning in. APT is a mask play. 50 SMA here at like 850. So that's kind of my risk. I'll give it down. I'll be generous with giving it some room, but I think it has some range to go again on this one, potentially for another squeeze to the upside. But yeah, I don't know. It's weird. It's really weird. AHPI, more ventilator and oxygen play. Mask for APT. COVID is bad here. Atlanta Reading said, yeah, in here too. I mean, Texas is I guess notorious for less restrictions, but Austin's not really a good representation of Texas. Austin's a lot more liberal, so a lot of individual businesses. I know my apartment complex just gave us an email the other day saying, guys, like, we are back into stage. I don't even know. There's like a million stages of all the mandates. I have no idea. But they're in some stage, and it's like no guests, it's masks, so it's like, and people don't really follow it, to be honest, and it's not really as enforced as it as, let's say, like, you can't come in unless you're wearing a mask. Like, people walk into the apartment complex and like they're not wearing a mask. No one says anything. I mean, I don't know. I don't see it very often, right? But it's at least being said. I got a bunch of texts and stuff saying the hospitals are overrun again. So, I don't know. From that type of stuff, it sounds like it's bad, but we'll ultimately have to see how these plays play out. I mean, I think the mask plays and the ventilator plays will be the first place to go, personally. But then again, they have been kind of like I don't want to say overrun, but they've been kind of like overplayed. So I think that there's opportunity on more of the bio plays and more of the medical plays, rather than necessarily like the mask plays in the next like couple months into the winter if things continue. Now, one thing to also note, though, I think last year we saw the same thing. We saw increasing cases into like August, and then September was like a pullback month in terms of cases. With the vaccine, you would think, right, things pull back. So I don't know. We'll see if, and there's more restrictions back then, I guess, too, because, things have been lightening up. And so I think we're seeing that things lightened up, cases going up. I don't know. But it's just something to be paying attention to watch. I think I'm curious to see how that plays out and to watch the curve and to see how the curve, I guess, of cases, if it starts to slow back down and pull back, then I think you see a big surge back into kind of the travel names and whatnot. So we'll see. Let's see. ZY did lose neither interest nor money. Fortunately, that's good. The thing with it is that it's been kind of more of a trap for me. It's been like the past couple months, because you guys know how I like to swing small caps, and that was like I had a strategy that worked really well, and of course, past couple months it hasn't simply because everything's just taking hits. So I'm kind of just like taking a step back from that, more scalps here and there, and kind of positioning myself for more like bigger picture trades in the meantime. So I'm kind of like just chopping around. It's more of a capital preservation time for me, at least I feel like, rather than like a go, try to make as much money as possible. Like, oh, you gotta be in this stock and this stock. I have no interest in doing that right now. Into the fall, I'm ideally hoping to see things heat up, and then maybe, different story. ZY is interesting. This recovered quite a bit on Thursday. It made a pretty big move, but I don't know. Let's take a look at the 1 hour chart because we can get a better sense for support resistance. It seems like on Friday we had 1150-ish or 1160 area holding up. Below that, I mean, it kind of lines up as 1150. I would say 1150. I don't want to see this thing dropping below 1150. Resistance to the upside is up towards like 1650. So that's kind of the range. It's got quite the range. I mean, buying this thing closer to 1150 with a stop just underneath and targets up here towards 16 plus is, I think, a decent idea. But it's an interesting one. I don't want to know if I'm very interested in that unless I have a longer term horizon on it, but I don't know enough about it to have that right now personally. Okay, so I'm going to scroll through. TUMZ, code play, back to schools, etc. TUMZ, let's take a look. This thing is, it's a bottom play. So if you like a bottom bouncer, this thing, see, this is a perfect example, right, of what I was kind of saying too, of the craziness. Look at this stock, right, was a $1 stock, beginning of just early 2020, okay? Goes up to 17 and comes back, and it's getting back down to a much more favorable spot, right, for a swing trader for more interest. So it's getting down there. So under $2 could be a decent accumulation area, I think, potentially. But see how we had so much time that needed to kind of go by, and now we finally got that. And now it's, a better opportunity so much lower. So a lot of these small caps are coming down to really good bottoms. And some of them especially are trading a lot closer to cash value. For example, one of the swings I have, not a big swing, but I think it could be a bigger play at some point in the future, which I'm giving it plenty of time. I'm not really in too heavy. I'll be buying more if the market firms up for small caps. But an SPR, they have earnings this week as well. So we'll see how earnings comes out and what they say. But they're, from the last earnings, they're trading right around cash right now. Their market cap and cash are right around the same amount. If not, I think they technically should have more cash than the market cap. We'll see what happens in this earnings. So, this could be an interesting one as well. Super bottomed out play, had a crazy run, and now it's super low. There's going to be opportunity like that across the board. So I think this is, into the fall, early fall is where you can start accumulating some of these bottom plays. And, as long as you're smart, playing stocks have a lot of cash that have potential upcoming data releases and trials and whatnot. And you're playing with catalysts out ahead of you. You're playing with a lot of cash, so your offering risk is low. And, or you can even look to the filings. Is there an S3 on file? If there's no S3 on file, even better, right? And so these are going to be good plays. But we got to be more, careful. Don't just buy any random stock because somebody said it's a good play. It's a bottomed out play on social media, right? That's not how you want to play it. It's going to be a little more strategic in some of these small cap, but there's going to be some good risk reward here, good plays, I think. IDEX built a good base. IDEX has always had tons of rumors across the board. So I've never played it, but look at that. It is decent. And that base is nice. It can draw let's get the box in here. It's got a good support. It looks like down here towards the low twos. And, risking right now, you're going to risk yourself. I would have, lately it's holding 225. So I would risk it to 225. Yeah. Could it drop below a little more? Yeah. But risking 25 cents here for a move, it's got plenty of range on this chart, and it's one of those stocks that's done quite well in the past. I wouldn't be surprised to see this thing trading up over $3 again in the short term, for sure. So it's got range. If you look at this is a good risk reward chart. If you're going to risk it at 225, let's say you're getting it at 250, you're going to risk yourself about 10% down for targets. I would have targets up over 3 at least, which would be at least 20% upside. So you're looking at 2 to 1. At least in terms of that ratio, potentially more. That seems like a good risk reward under 250. IDEX under 250 with a stop under 225 roughly. Maybe you give it a little bit of a longer leash and 210, something like that. It could be a decent opportunity. If not, I think it can come back down towards this 185. But you can always get out and get back in. There's no rush a lot of time on some of these plays. So I kind of like that. So put the money you would normally put in your student loans in your trading account, make some money on the meantime. That's one way to do it, I guess. And I think a lot of people probably did that, in months past and potentially got burned, and hopefully not. But that, I guess, bailout, it's not a bailout because, they're not giving people money. But if you think about it, right, it's a massive, especially for someone who's coming from somebody who has student loans as well. It's massive if you think about not having to pay interest and not having to pay, the balance. So in the meantime, if you're making money or if you're trading, right, you could be stacking money into a trading account or just stacking money away. And ideally, right, making money, even if you're putting it in the S&P, right? The S&P done well, or you're putting it into like bigger name stocks like Apple's, Amazon's, Tesla. So you're doing pretty good. If you did that, you can probably come back and it's given you a good chunk of time that you didn't have to pay the student loans. And now you can take that money out and take a good chunk right off the top. And at least in the meantime, you didn't have to pay interest and you didn't have to worry about that, accruing interest. I know if you have a private loan, different story. Private loans, they don't care. They're like, hey, our money's due. Federal loans, different story. They're like, hey, you're not you don't have to pay that until end of January 2022. That's the new, bill or whatever Biden said last week. So that's that. But let's see. Your thoughts on PUBM? I know there's a guy who I know who who had student loans and decided to take out a loan and use the money for trading. And he's a multimillionaire now, but I know it. People have done it, right? It's not like it's now probably more often than not in here the negative stories, but it's people do it. PUBM 50 SMA, so this 33.22 is an area to watch. It needs to get up, I would say, over like $34 for that breakout, for us to see that breakout. So that's one to watch. Although it's got a pretty good risk reward here. You're looking at pretty good risk reward, 28 down to like 25. But I mean, really, the low is down here, and this is down towards like 27. So I wouldn't want to hold it below 27 because we can see some more downside, unless you're a longer term investor and you're buying the red and you feel confident. But if you're looking for a short term trade, buying it in this kind of range under like $30 ideally is great. But a breakout over the 50 SMA over 34 looks like it can give it some juice up toward $35, $40. Certainly possible in the short term. I believe it's also a highly shorted stock too. If I'm not mistaken, let's go to FinViz really quick. Let's take a look. Maybe I'm wrong. Let's take a look though. Yeah, no, it is. It is. This is a very highly shorted stock, PUBM, 42.51% of the float short. Something to watch. Something to be paying attention to on that guy. Look into MU. Let's take a look at this guy. MU. This is a good one. This is actually looking like it's breaking out in the kind of consolidation range. One of the other tools I also could use here is a little trend channel, roughly, right? Here's your channel on this guy. We had lows down here towards like the bottom of this channel, highs up here to the top. We broke out of that channel, but we got some resistance up here in this 84 area. And then we have some more resistance up here towards 85, 86. So it's got to get a couple more dollars of upside. And I think over 85, this thing has some good range to the upside on the chart. But definitely one of those plays that if you even broaden things out to look at this type of channel, right? We're at a decent channel on this bad boy, right? So we're still kind of, if you're looking on a broader view channel, we're at the top of that channel. So would like to see it breaking out, or it could come back down and you can get a much better average or entry point if it gets rejected here at this 84, 85 level. DM, another small cap getting destroyed. Yeah, I mean, it's just, we've been seeing it across the board. I think it's, you kind of got to watch for, what has cash, what has more of that kind of fundamental value in a sense. We're getting back to, I think, a much more rational market, which is good and bad. It's good because I think when things slow down eventually, there's opportunity, but in the short term, right, it stinks if you're in these stocks, right? Hopefully it's a good lesson for a lot of people. It's building a base here at like this $8.59. So let's see if it holds up around $9, but it's building a decent base for DM, desktop metal. Definitely a popular one that I remember, months back, but it's got a good base here. Good, chart wise, decent risk reward to me. Under 850, get out, right? But that's going to risk you less than $1 of downside. So it's decent idea. I mean, I might put it on my swing list as well. I'll put that down as a swing idea. And there you go. So that's that. Decent risk reward, I think. So Kathy Wood unloaded skills. Well, that's probably why it's pulling back too. There you go. All right, let me see. I'm scrolling through. Opinion on SDC. There's a lot of stuff I got to get through here. Let's do a little rapid fire. SDC Smile Direct Club. We got some good support right here. It's building 650. Risk it to 650. Under that level, it could come down further. So that's our kind of area is short term right now. That's the risk I'd be going for on that one. Let's see. HUT. Hut 8 Mining. This is actually curling up really nice. Look at that volume on Friday. Really nice volume. 7 million shares. It's breaking out of this kind of consolidation we've been in. So would now want to see this thing on a pullback, because it's going to pull back at some point. It's had like, 10, no, what is this? Like 1, 2, 3, 4, 5, 6, 7 green days in a row, something like that, or 8. It's going to pull back, but I would like to see it holding 550. $5 is it. $5 is a stop for me if I'm playing this one on the move up. So I'm going to risk it to 5, which is about $1 downside from here, but I don't want to hold it below that level because it can come down into the 4s and 3s, and there's no need to hold it back down. Let it come back down and buy this thing sub $4, or maybe 50 SMA bounce at some point if it holds up. That's how I would see that one. Updates on the fitness routine. Well, personally, I still have some shoulder issues I'm working on, so I haven't been getting too serious back in like to what I used to do. But I used to, I used to be someone who would go to the gym. I still do pretty much every day, 5 days a week at least in the gym. But in college, it was nuts. It was every day, and it was all the amount. I mean, dining hall food, just pounding that, and just going to the gym. So I was able to pack on a decent amount of muscle at the time, but I've been doing it for a long time. So it's been a long time in the works, and I haven't been as serious the past like 2 years as I used to be. Somewhat injury related, but a year and a half, somewhat injury related as well since I graduated college. Really, injury kind of issues, but I have go to physical therapy now, so it's been getting better. So I'm looking to get a Gold's membership here in Austin at some point soon and start going more consistently, hitting the gym more consistently. Back into some strength work, but it's been years in the making. I actually originally had a fitness channel like back in high school, so I think it's still up on YouTube somewhere. I'm sure you can probably find it if you really wanted to. Have you ever considered bear ETFs? Yes and no to hedge. Yes and no. I mean, the problem with that is that I did play that actually. I'll pull it up. I had it from this past week. This is the stock I played. Let's pull this bad boy up. It was LABD. LABD was the biotech bear ETF. Problem is that I don't really, it's a good hedge, and I had it as a hedge, and it worked out as a good hedge for the week. It was fine, but it went down, right? I was in it from like 24-ish, 23-ish, and it pulled back all the way down here, and I got out because it cracked my trend roughly, and I didn't want to, hold this one down. And biotechs, and based on virus cases, I don't know. I figured this could be a decent sector going into the fall. I don't want to mess with, and bios are generally hot into the, December period, so I don't want to mess with that right now. Could it, do well? But this is a bear ETF. I like it as a hedge. If you want to use it as a hedge, use it as a hedge. And I use it as a hedge, and it hedged my portfolio this week a little bit. If we saw a big down day, biotechs get hit hot, or they get hit hard, and this would have done well, but because it's a 3x bear ETF, but it did not. So it's not a bad idea. As we push all-time highs, it's not a bad idea. To have something there. If you feel nervous, then do that. And then at least it gives you some kind of, okay, no big deal, right? Now I can still go about my normal plays the way I'm playing it. So buying your other investments, you can feel a bit better about buying some stuff if you feel concerned about that. So it's not a bad idea. All right. TAL. Let's take a look at this guy for a swing idea. Look at this. It's holding up quite. Look at that range. Jeez. Wow. This is nuts. I said China play, right? So this is interesting. It's volatile. I would say I would not want to hold it below like 550-ish. I would say this is going to either bounce now or not. So I would say 550 on TAL, and that's it. I might add it to my list as well. It's a riskier play, but I think it could be decent. Let's see. We'll see how this one plays. It fell out 375, bounced $7. It's got the range. It's got quite the range. So I would say long for this one versus like 550 as a stop for me. How I play it. Why 550? Because that was this dip right here at the open on the 3rd. 525. You can say 550/$5 roughly. I wouldn't want to see it holding below 550 too much. If it does, I'm out. If it does drop below 5, that's also kind of like a stop point for me. So it's not a bad idea. Just be careful with that. Don't want to be holding this one too low because it could go down, sub $3 and then bounce at that point. But you don't want to hold it all the way down. OCGM we talked about at the beginning. VISL, is this the week? I don't know, man. It's a patience play. It's been one of those patience play for me. They have earnings coming up soon, I believe. So we'll see. The chart is setting up. If it holds $2, it's setting up really nice. I like. I'm not adding more VISL unless it gets down to 2, and then we have earnings coming out. So I probably won't add until after earnings. And earnings could be the catalyst that sends it up. whatever. They apparently still have like 50 plus million in cash, so that should be decent. But we'll see how the earnings report looks, and we'll see from there. But I think it's still got some potential, However, it's also a good example of why you scale out on pops. And this thing had a couple days in the past couple months where it popped up one day, popped up over 325 multiple times, and that was an opportunity for me. I didn't sell very much, but I did sell some shares, and then I rebought those shares under 3. And that's kind of been the process I've been doing now. Of course, it's close to 2. I'm kind of sitting on my swing. I can add to it, but I'm not going to be, ferociously adding to this thing until earnings come out and we get into the fall and small caps hold up, as long as it holds this $2 support. If not, I'd be a little bit cautious there. So we'll see, but I still like it. We'll see how this plays out. The earnings, again, is good to kind of get a sense on how the company's doing. Are they managing things correctly? Or do you like how they're handling things? Do they have enough cash for you? And how do you feel comfortable about it, right? So that's that. You can put in something like pays monthly dividends. Yeah. Yes. I love monthly dividend plays too. I love that stuff. Personally, I look at AMD. AMD, I think, is one that could come back down to $100 personally. So it might be a potential target to the downside, but I'd watch this 110-ish area. If it holds 110, it dip below a little bit in the after hours. If it holds roughly 110, it could bounce from here. But if it does drop below 110, I'm not interested until it comes back down towards $100 and holds support and gives it some time. Personally, this thing could easily come back down. That's not a good candle. It's like a really nasty kind of candle where it tried to pop up on Friday and then it really kind of hammered down towards the close. So I'm not a big fan of that look on the daily chart on AMD. So I would say close to $100. I maybe get interested in long again, but even that, after this run, this could be a good put play. I wouldn't be surprised. I mean, I might even write this one down. Okay, so these are my two swings. The DM and TAL are swing ideas for this week, and then AMD is another idea for a put play versus 110. If it does fall below 110, it's a spot to get in on puts, and that's my stop point potentially on AMD. There you go. Let's see. I'm sorry if I'm missing some stuff. I'm going to scroll through. DMS good tech, but may take some time to make money. Yeah, that's the thing, and that's where you kind of see it. MVIS is also another one of those plays that I think people like the tech, but also will take some time to actually make some money, right? They don't have much in terms of, dollars in terms of dollars from their tech right now, but people like it. And it's also one of those plays that could squeeze. If MVIS gets back up into this 18 range, I like it potentially short unless it gets over 20 with a stop at 20. But it could squeeze, so I'm not going to fight a squeeze on the short side, right? Just because I think it's fundamentally overvalued. Sure, it could be fun. Anything could be fundamentally overvalued. We've seen the past, X number of months, how many fundamentally overvalued plays keep going higher. So I'm not going to fight it. But MVIS is one to watch as well for a continued short squeeze tomorrow. If it holds $15, if it holds over $15, I would not be looking to go short MVIS. I don't think so. Definitely not. Better opportunities at some point or somewhere else or somewhere, in the future on MVIS, because the squeezers will be out and it's a Wall Street Bets play. They can easily get behind it. Now, of course, the power behind Wall Street Bets these days is a lot less than it was a couple months ago, but still, no need to be on the wrong side of that because it could keep going. For example, Btbt, we talked about at the beginning. Btbt keeps on going, right? Makes no sense, right? But it's going. Or it kind of makes some sense. Bitcoin's been pushing up, but to the degree that it's been making moves, makes no sense. Okay. Let's see. In OGI for federal legalization. Let's see. I'll take a look at the chart. OGI. I'm curious for that as well. Yeah, it's setting up. It's got the 200 SMA support. This could be a decent swing as well with a risk 250, 240-ish. Yeah. I like that idea. I'll put it on the list as well. OGI. Swing idea. We'll see, risking it to that 200 SMA. And yeah, if it holds up, great. This is one that could be kind of, consolidating for a bigger move up, right? It looks like it could be setting up. Do you think SOS will soar? SOS. Yeah, here's the thing with SOS. It's a short squeeze play. It's a Chinese company. People are scared of China and all, skeptical of them, all that stuff. But it can squeeze. And if Wall Street Bets gets behind it, it could certainly go. So SOS, I talked about at the beginning of the video of the live, is if you look at Btbt, FTFT, SOS is one of those I would throw on there as well. Watching Bitcoin. Let's take a look at Bitcoin actually as we speak. It's been about 45 minutes since we looked at it. Bitcoin has got some $45,000 resistance. If Bitcoin gets over 45K, then the SOS, then the Btbt, FTFT go crazy, I think. But SOS is kind of curling off the bottom. It could easily squeeze if those names push up. But I think SOS is going to be one that's going to be kind of a follow the leader. It could eventually be a leader at some point in terms of like it's running on its own and doing its own thing. It could. But for right now, I think it's a follow leader. So watching like the Bitcoin miners, watching Btbt, watching Bitcoin in general, right? Then SOS is will probably be following along to some degree on that front. So that's what we're looking at. Let's see. ATHX. This one had a decent day on Friday. Looks like maybe some news on that front. But down here, sub 150 looks decent to me on this chart, although, it has some, I think under 150 is where I'd be looking at. Under 150 is a good accumulation zone for a swing idea. And that's also me not knowing anything about the company fundamentally right off the top. But chart-wise, under 150 I think is a better risk-reward, personally. How am I playing? Oh, yes, CEI. I saw that comment. I didn't respond yet, but I will, and I also will talk about it right now. So CEI, I'm watching crude oil. So let's go to the chart on CEI. CEI has been in this kind of range lately between like 43 and like 53. So it's in that range. I think under 50 cents is a good spot to accumulate some CEI. However, I'm also not going to force this one. So I trim a lot of my position on CEI. I have like 1,000 shares left just because I want to see it. I want to be able to watch it every day and just see what it does. And it's, depending upon your account size, and you guys can do what you want to do, how you want to play things. But for me, it's like, okay, I leave it on there and I watch it. I don't care if it goes to 20 cents. I don't care if it goes to 0. Let it do its thing, and I will watch that do its thing. But I do want to look at crude oil futures. So let's take a look at that. Let's look at crude oil futures, investing.com. Boom. Let's pull up crude oil, and then we can get a sense. So crude oil looks like it's down. Let's take a look at the daily on crude oil. It is pulling back a little bit from where it was. So I'm watching oil on this, but CEI, I think, will have a nice PR coming at some point that can send it up pretty big. It's one of those plays that is always, it's a cult stock, so it likes to run. It's a weird way to say it for someone who's new, but it's a cult stock, if that makes sense. Look at the run it had, last year into this time, but look what it did before October. This stock went down, right, all the way through August, September, and it fell down to, pretty much where it's at right now. Right? Found out this level, then bottomed out, held support, and then went on this crazy run, which from those levels, there was opportunity for 70% in a couple weeks. There was 100 to almost 200% there. And if you even gave it more time and played it again as it bottomed out here, held the 50 SMA, there was 500% from those lows that it went. Now, okay, that was crazy COVID market times. Yeah, but I think that there's a run. I think this thing has a range to $1 at some point in the future, but I'm not going to be going crazy right now. Volume is increasing. They are diluting a little bit of shares, I believe, as of late. So obviously not great, but you're getting down to a point where they just had an acquisition, I believe, of Viking Energy Group. You're getting to a point where this is getting pretty favorable for a swing and in more of a textbook kind of play that I like. Patience play, buying this thing down here sub 50 cents and holding for that spike, looking for 25 plus percent from those levels. So honestly, I would say targeting 75 cents or more is pretty doable on CEI's case, but I would give it into the fall. So, it could come down much further. And so I'm going to let it do its thing. If it does want to dip even further, I'll let it dip, and then I'll be adding heavier when it does this type of thing, right? After the continued downside and it kind of holds up and it starts finding support, that's when you add, rather than just buying this thing as it falls down. You can buy it as it falls down on stocks you have a higher conviction on, kind of longer term outlook. I don't for CEI as a company, but I do for a swing. For a small cap swing. I know it will get pumped at some point. Almost tried to this past week, but the market's not great for that right now, so it didn't really do anything, didn't amount to much, but it is what it is. Okay, let's see. Coin on my watch list, earnings on Tuesday. That's interesting. Let's see how Coin's looking. The chart on Coin looked decent, if I recall. Yeah, look at this chart. It looks pretty good. I like it. Coinbase breaking out up over this 260. Looks like it has some room. This was a great. This thing got killed right on the IPO, right, or the listing, whatever you want to call it, right? Wasn't a traditional IPO, but it got crushed, fell down to like the low 200s, and has been a good buy down sub 225 if you've been accumulating it, which I know people who have. Personally, I haven't, but if you have been, it's looking really good. Looks like it really looks pretty strong to me. So wash into this earnings report. Of course, be careful, but I don't know how the numbers will stack up compared to prior quarters, but we'll see. Crypto has been kind of cooling off the past like 2 months or so, 3 months really. So I'm curious how that plays into the next earnings on coin. Let's see. Pins. Thanks for the analysis. I appreciate you guys for tuning in. This is great because I think we're getting to a much better point, right? If you go back a couple months, we had hundreds of people on the live stream. I couldn't read the comments. It was annoying because people were just spamming tickers, and it was like, okay, whatever. But now, people who are paying attention to and watching on the lives, they actually seem to care, right? People actually care. You're actually here for the long term. You're not here for the quick money like a lot of people were a few months back. And, now we're kind of in a better spot. So here's your rough channel on pins. I like it down here, risking it down to like 56. So I kind of like it here, but it could see some more downside in the short term. It could drop below the channel line. Isn't perfect, but it could drop below. Worst case scenario, I wouldn't want to hold this thing below like 54. But it seems like a decent spot on Pinterest personally after the massive pullback, but it could be one of those kind of slow. It has a dump, pops a little bit, and then it slowly fades back off for the next couple weeks and gets quiet for a little bit before the next move up potentially. So I don't know. Have you ever used Gush or USOI? I personally have not, or Drip to short oil. I personally haven't. I've just been playing my oil plays. So for some small caps, Husa's been one that's I love for the small cap oil plays. Low float play as well. I like to play it long, short. I'll do it both ways. Honestly, when it spikes, I'll play it short. I did it, last spike. I've played it long multiple times as well. USCG, same thing. It's kind of been slowly fading on off as well, but this is one to watch. I mean, definitely not going to be going short oil on short. USCG now based on where it's at and because it's such a low float. But thing spikes up. It's one of those plays that's worth a shot on the short side, or even right here, it's worth a swing on the long side if you like oil plays. And you think they're going to get hot, right? This one's a squeezer. It's an easy 100% play. Pretty quick. It happened fast. He moved fast, so it's one to watch. USOI, another ETF that pays monthly dividends for playing long oil. There you go. USOI. There you go. Monthly dividend play, long oil. If you want it, take a peek at this one if you're interested. For those who are seeing this for the first time, it's an interesting idea. VOR showing signs of uptrend. Let's see. Not Visa, VOR. It looks like it's trying to bottom out here. So the risk reward here seems like it's got a support here at $12. So I wouldn't want to hold it below 12, but it is. The past couple of days, let's look at the 1 hour chart. It is. It's putting in higher lows. Let's see. We got this 1201 and we're putting in higher lows. So it looks like the most recent higher low is like around this 13. Sorry about that. Around 13. So if it can hold $13 from here, it's good. And it keeps going. We have some resistance up here towards this 14.25. That was the first kind of bounce point. When it fell down to 12 the first time a couple weeks ago, it bounced up here, hit 14.50 or 14.25, and then got rejected. So now what we want to see is almost like it's like a double bottom setup, right? We have two kind of lows down towards 12, and it held up decently, and now it's pushing up. Let's make sure this doesn't get rejected up here towards 14. If it gets rejected again towards 14, this could easily come right back down to 12 and drop below 12 and see some heavier selling pressure. So that's one to watch. It needs to kind of hold up here, $13. Ideally, it would be great. Worst case scenario support here, you have down towards 12 for right now, but up over 14 and holding over 14 gets the juices started, it looks like, for a bigger move up. Quite the range on this one. So it looks like it's kind of that showing those first signs of reversal for sure. It's more volatile though. So again, right, it's not going to be like, this thing can easily bounce from here up towards like 18, $20, 40%, as a decent target, right? Short term, but it can also easily drop below 12. And especially being a biopharma play, one of the more volatile stocks in the market, could fall below 12 and go to like 10, whatever. Sorry about that. I gotta get rid of that volume. So that's at least my look on that one. AHPI I think is a decent idea, but I personally want it lower. AHPI I like rather than playing this, I think dips are potentially a decent idea with a risk maybe down to like 750. I like APT as a better chart. APT sitting here, not APT, sorry. APT is a better chart. It pulled back a lot more chart-wise, so it's got some support here down towards $7. You're sitting just under 9, 50 SMA here at like 850. I would risk it down to like $8, $8.50, and play it for the bounce back up. I think it could be a decent play into the fall mask play. There you go. So that said, let's take a look at futures again really quick, and then we'll wrap things on up. So I appreciate you guys so much for tuning on in. Futures are a little bit more red. So small caps down about a little more than 0.5%, tech down 0.5%, and then S&P in the Dow down a little bit over 0.25%. So it looks like a red morning to start going into tomorrow. So we'll see how that plays out this week, but it looks like a red start for now. This could change overnight. VIX a little bit elevated. We'll see. So we'll see how the news breaks and if things change from tomorrow. But I appreciate you guys for tuning on in. Thanks so much for watching. Hit that thumbs up button if you are new here. This is staying up on the channel. You can go back to the beginning and watch the beginning. We talked about those 5 stocks that I was watching towards the beginning. I talked about my thesis on them, long, short, what I'm looking at, short-term versus long-term plays, and then of course more of a Q&A the rest of the hour stream. So thanks so much for tuning on in. I appreciate you guys so much. Hit that thumbs up button, and I will see you in a future video. Peace.